Welcome on board, Amit Syngle, the MD and CEO, Asian Paints. Hi, sir. Thank you so much for making time and speaking with us. We know that the volume growth was around 10%, but help us with the details, Mr. Syngle. Was the growth led by more rural-facing products? Was the urban growth which was getting traction?
So what we saw in quarter one was a strong volume growth, which came over a fairly big base, which we had in Q1 of last year to that extent. Even the value growth was about closer to about 7%, which was quite healthy given the perspective of a higher value base of about 60% last year. Overall, when we see the growths, both the T1, 2 tier cities and T3, T4 cities have grown almost equally for us to that extent. And it's a good sign that some of the rural economies are kind of coming back in terms of how we see our growth trends happening with respect to the Asian Paints products to that extent. Our projects division has done extremely well, which is the B2B customers. And there specifically, we look at the builder segment, the whole area of factories and the government spending. I think all those areas have been fairly strong in terms of what we have really witnessed in terms of our overall growth. We also see a huge kind of good growth coming with respect to the industrial sector, both auto OE and the general industrial market. So these have been the larger components of overall growth in terms of what we have been able to witness in the last quarter, which has just gone by.
Mr. Syngle, what's the outlook on demand going forward? Given the low base of last year, progress of monsoon and festive season is likely to impact demand on the positive side. At least that's what some part of the street is actually expecting. Do you see that take shape in the second quarter, third quarter, materially improvement from here on?
Overall, we see that on an absolute level, Q2, Q3 definitely appears to be good in terms of going forward. We've had a very, very strong monsoons, which would kind of really I think get the whole optimism with respect to the rural growth in the markets. We also have a fairly long season with the Diwali being in November this year. So we have two good retailing months in terms of September and October with us, which fall into quarter two and quarter three. And given the fact that last year, we definitely saw that the season was a bit depressed to that extent overall. I think we definitely have strong hopes in terms of quarter two, quarter three being on an absolute level quite good.
Okay, so you're expecting big things from Q2 and Q3 given festive season has extended and monsoons have been something which has supported the rural sentiment. But on the margin front, despite a very strong show in Q1, you've maintained your guidance. What's the reason of that going forward? Do you anticipate maybe some price cuts, higher discounts, or given the raw material prices, you are seeing some pressure?
So what we see is that, the clear reason is that the overall PBDIT has gone up almost by 550 BPS points in terms of as you compare to last year. Even sequentially, the margins have gone up very well to that extent. The reason definitely is that we have seen a lot of work around sourcing formulation efficiencies we have done, and we've been able to control overall overheads to a decent extent. We also see softening of some raw material prices, which has helped us in terms of really getting overall to good gross margins, and therefore the PBDIT margins are extremely good. As we kind of go forward, we are not very clear as of now that the softening of the raw material prices would stay very, very strongly. We are seeing some upsurge in the crude prices. And in terms of the rupee dollar volatility, although I think there is nothing which is in sight as of now. Given these considerations as of now, we are watching the environment and we will see in terms of how really we want to guide the margins with respect to going forward. We also feel that we are going to look at spending more on our advertising spends and below the line spends so that we can invigorate the demand more as we kind of go ahead to that extent. And therefore, what we see is that we would wait and watch in terms of looking at how the markets pan out, how the environment goes before we really take a call with respect to the overall margin guidance.
Mr. Syngle, let's talk about the margin picture. Do you think margin pressure will continue or stem from the increased competition as well? Because the competitive scenario is only getting much more heated up. Birlas and to Jindals, so everybody wants to get into the paint division suddenly. In fact, Birlas may actually just start their first factory very soon. That's what we are gathering. What's that angle looking like?
See, I think we have never felt any pressure from any of the new incumbents in the past also to that extent. We see a lot of new incumbents already entered the market in the last about 6 months to that extent. And therefore, we have been growing at very, very strong volume growth rates as we see kind of going ahead. Last quarter was also strong volume growth, which we delivered, which was double digit. And now even this quarter, which still had a very, very heavy base, delivered good double-digit volume growth for us. So I think going forward, we are pretty strong in terms of a longer Diwali season ahead. And I think demand will be good. And given the strength of Asian Paints brand and our supply chain and manufacturing capabilities, we think we are on a good footing and we need not kind of worry about any kind of competition coming in.
Well, yes, given the pedigree that Asian Paints has, I'm sure you don't have to worry about it. But of course, market share management is something that you'll have to, put your focus onto. But just shifting focus to the industrial paint, you talked about it in your first answer that that's looking strong. But any new customer additions that has happened overall, what's been the conversations like with a lot of your industrial clients?
So we have been kind of dealing with a lot of new players in the B2B industry as we look at all the newer auto players in terms of what we have started dealing with. We have started dealing on additional lines with existing customers, newer people into the consumer durables market with respect to our powder coating and other areas to that extent. So I think lots of additions as we see in terms of overall getting to newer B2B customers. We have got into a lot of government sector with respect to where they are spending money in terms of the infrastructure markets and so on and so forth. So all over, we have seen good growths coming from existing as well as the new customers as we have gone ahead in the industrial market as well.
Mr. Syngle, the biggest asset of the company have been your distribution channel, the main forte of the company. What investments are you making from here on to further expand that, increase the penetration in the rest of the country and work on distribution?
So overall, we've got a very, very strong manufacturing capability in terms of 8 plants of Asian Paints and a huge overall manufacturing capability with respect to contract manufacturing and so on and so forth. We see that we have been kind of lining up a lot of investments. We have already announced our 9th plant, which would kind of come up in central India in terms of going forward. We are increasing our capacities as far as our Ankleshwar plant in Gujarat is concerned, the Khandala plant in Maharashtra, and our Kasna plant in North. We are also looking to kind of go forward with respect to our second phase of expansion in the Mysuru plant. So as we kind of go ahead, we have lined up almost investments closer to about 8,750 crores, both from the point of view of looking at greenfield, brownfield, and a lot of investments with respect to backward integration as well to that extent.
Okay, and just before we let you go, Mr. Syngle, talk to us about the growth outlook for FY24 as a whole. Will it be more value-based growth or volume growth is something that is also largely expected to pick up from here on further?
So overall, we have maintained in terms of our guidance that the PBDIT margins will remain in the band of about 18 to 20%. And that is something which we have been speaking for some time. I think we kind of, remain very, very strong on that with respect to volume growths. If you look at the last 12 quarters, the volume growths have been very, very strong in terms of double-digit growths. I think for the year, we are definitely looking at good volume growth, therefore kind of continuing for us in terms of going ahead. From a value point of view, I think definitely, the value and the volume growth would be kind of neck to neck in terms of how we see, given the fact that we are looking at a lot of new product launches and a lot of areas to work on as we kind of go ahead.
All right, Mr. Syngle, we'll let you go on that one. Thanks so much for joining us on the show.